Welcome to the YYJ Real Estate Podcast, where we discuss everything Victoria real estate. I'm Adrian Maclaren. I'm joined by
Vincent Baart
and
Jocelyn Cseff.
And today we have a special guest,
David.
Go ahead, David.
David Steinberg.
He's doing his own intro. I love it. We are the CNS team, and David is a mortgage broker at Olympic Mortgage.
Yes.
Yeah. We are real estate agents at Remax Most in Greater Victoria. David, thanks for joining us today.
Thanks for having me.
So the reason we brought David on is, he's our mortgage expert for the podcast, and we recently went to an event yesterday. David had us for breakfast.
It was a lot of fun.
Yeah. Hash browns, scrambled eggs, bacon, sausage.
Did
Glenwood
you make it?
Glenwood meat sausage.
Ooh, the good stuff.
I made all of it.
That's
Yeah.
amazing.
Yeah.
I'm sad I missed it.
It was delicious, and other than the breakfast,
We did a mortgage workshop.
Yeah, exactly. And so, typically, with real estate events, sometimes you go and you're like, oh, geez, maybe it's gonna be boring. Maybe I'm not gonna learn anything. I'm just
Never.
going for the food. David killed it.
Oh, thank you.
Yeah. Really, really insightful. I thought we'd touch on a couple of the things that he kind of, talked about, went over during the information session. David, the first thing I kind of want to touch on for our listeners is the difference between AAA lending and private lending.
Okay. Yeah. So AAA lending is your general normal bank lending for people that qualify for their mortgages. So these are people that have good credit. The debt servicing ratios are within guidelines, so the income is high enough technically to qualify for the mortgage under Bank of Canada guidelines, and good credit, good income, and those are the two main things, and of course enough down payment. And the down payment also has to be from the right source. So down payment can't be cash or crypto, for example.
Right.
No Bitcoin.
No Bitcoin.
Well,
no Bitcoin for down payment.
It could be if you have it sitting in an account.
Right.
You're looking for 90 days history?
Yes, 90 days history for actually for a couple of our lenders, they will accept 30 days history, but that's only for uninsured deals. So for people who are putting more than 20% down and an uninsured deal can be 30 days technically for a couple lenders only. Most lenders are 90 days.
Okay.
Yeah.
And I'm just going to jump in. I think that's an important caveat because a lot of people think, oh, I'm going to go see an open house on the weekend, write an offer on Monday, get it inspected on Wednesday, and move in 2 weeks. A huge part of the home buying process is getting all your ducks in a row with your mortgage broker.
Mm-hmm.
And a huge part of that is just, he's going to ask, where's your down payment coming from? Where is all the money coming from? And just planning a few months even before you go to write an offer on a home, you should be sitting down with a mortgage broker and just kind of getting all your ducks in a row.
Mm-hmm.
Yeah. And there's been a couple of times where, I meet a client and we start looking at property. And when we start talking about the mortgage process, they're like, oh, I already have a person. And I'm always scared.
Yeah.
Because there's been a couple of times where, right at the last second, my client didn't know that they had to have a 90-day history of the accounts. And I'm like, well, did the mortgage broker not confirm this or go over this with you?
Yeah.
So that's why I really like, passing people over to David, because I know I can trust him. He's going to do his due diligence. He's going to make sure everything's good. So, and then so with the AAA lending, private lending. Yeah. So what about private lending? Who's using that?
So people that don't qualify. So there's like three tranches of lending. There's the AAA lending, like we spoke. And then alternate lending is right in the middle of private lending and AAA lending. And now alternate lending is still done through financial institutions such as Equitable Bank, we use a lot, CWB Optimum, which is Canadian Western Bank. Haven Tree is somebody that we use a lot. And Home Trust used to be a big player in this game. I think they actually closed down. But the alternate lending is for people that don't quite qualify with AAA lending, but they'll still qualify for a mortgage. So alternate lending is not just based on, so private lending, when we go there, it's very property based. The decision is property based,
Right.
meaning the lender is mostly making the decision on the equity that the client has in the property.
They don't
want
to take any risks.
Mhm.
They're kind of wanting to secure their money. Like
they're taking a risk on the covenant because the covenant might not be as strong. So somebody who has bad credit, for example, or somebody who doesn't have income to show. There's a lot of people out there who make income, but it's not verified through tax returns. So,
right.
Mhm.
for example, people who, maybe people in the food and beverage industry who just make cash for tips kind of thing. Well, we can't use that income under the AAA realm. That income can be considered in the private realm. So the difference though is higher interest rate for private lending. So whereas AAA lending right now, we're looking at anywhere from 4 to 4.5% kind of thing for, generally your 5-year term. Private lending, you're going to be looking at anywhere from 8 to 12%.
Yeah, so quite a bit higher.
It's quite a bit higher, but interest only payments.
Right.
So it does keep the payments somewhat manageable. And generally anywhere from a 1 to a 3% fee. So
Right.
with AAA lending, we don't charge any fees, neither does the lender. With private lending, the lender charges a fee and the broker also charges a fee.
Right.
There are some cases where some lenders will not charge a fee, but generally they'll just increase the amount of they'll increase the interest rate by whatever they think their fee should have been.
Right.
So it's all about optics with the client.
So who's using these private lending solutions? Like,
So private lending solutions are really for people so let's say they already own their home and they maybe need more money they need to refinance. They need to consolidate $100,000 worth of credit card debt. So, if somebody has $100,000 worth of credit card debt, they're drowning.
Mhm.
That's a lot.
Yeah.
And let's say they have equity in their home. Let's say their home is worth $800,000 and they only have a $300,000 mortgage. Well, if they don't have income and they have $100,000 worth of credit card debt, they're not going to get a AAA mortgage at $400,000. But what they could easily get is a MIC mortgage, so mortgage investment corp or private mortgage. They're kind of lumped together. So that would be like a $400,000 mortgage, 50% loan to value. So the person is still only borrowing 50% of the value of their home, which private lenders eat that up. They love that because they've got lots of security in the property and they can take a higher risk on the covenant itself. Still though, with private lending and with alternate lending, the story does matter. So the private lenders generally want to see, they want to see an exit strategy. So they want to see, okay, this term is going to last for 1 year or 2 years, interest only. But how is this client going to get out of this situation? Are they going to start claiming income on tax returns for the next 2 years so that in 2 years they'll qualify at the AAA lending and move that client back over from private lending to AAA lending?
So it's kind of like short-term solution.
It's a short-term solution.
Yes. In like pinches or need cash.
Yeah.
Okay.
Well, I'll give one specific example. We always use like credit card debt or like, in the States, you might have like medical bills and things like that. Very scary, sad things. But in my own life, I've actually been able to use private lending to buy a business. So when I was a newer realtor, realtors, you need 2 years. If you're self-employed, you need 2 years of paperwork. So when you're early on in any kind of business and if you have a decent equity position, those private lenders will take that all day, every day. So it doesn't have to be a negative thing. It could be that there's a wonderful opportunity and you need access to $50,000. Private lenders can be a wonderful door.
I mean,
for that.
it's not meant to just be for the negative situations. It is for situations like that, or for people that have done really well in business, but they've only been in business for 1 year. So most AAA lenders need 2 years of self-employment history before they'll grant a mortgage approval. Whereas the private lenders or MIC lenders, alternate lenders, they can look at anywhere from somebody just starting a business to somebody having just 12 months in the business. And this is where it really comes down to the story. What's the reasoning that the person needs the mortgage? What's the likelihood that the person is going to be able to handle the mortgage? They look at the details and they come at everything from a common sense lending approach. So it's really common sense lending. Whereas AAA lending is just very by the book. If the numbers don't add up with AAA lending, it'll often be a decline. I mean, in most cases. In my case, I mean, I'm tooting my own horn, I guess. But of course, I'm gonna try I always try my best with every single client to get them into AAA lending. So I push hard. I push the AAA lenders hard to try to get my clients an approval. MIC lending is really kind of like a last resort for me, where the client still really, really needs something. I've tried my best to get a AAA lending approval. It didn't work. So now we're going to move to the alternate lending realm or the private lending realm.
Right.
Yeah.
Okay. No, that's useful. And I think that a lot of people maybe don't know that those options are available to them.
Yeah.
So that's probably going to be useful for a lot of people.
It's a leg up.
Yeah.
It's like a foot in the door if you need
It's
it.
a foot in the door.
Yeah.
It's for people who maybe also have just a very large down payment. But again, so they're just trying to get into the market. Right now, we all know it's still at this point in time, I think, somewhat of a buyer's market.
Oh yeah.
So, that I do have people that come to me and say, well, I'm going to wait. I'm going to wait for interest rates to come down, or I'm going to wait until I qualify. And then I think, well, it might not be great to wait, because if you can get a house now for $200,000 or $300,000 off kind of thing, or on sale, then it would be worth it to get into that house using private lending versus waiting 6 months until you're going to qualify for the AAA loan. So,
Yep.
So could you actually then say, like you talked about having the exit strategy when you're dealing with a MIC or something like that, could you say my exit strategy is that the Bank of Canada is going to lower the interest rate and I'm going to have a better chance of qualifying?
Yeah.
Like,
Yeah.
would they
for
look
sure.
at that and
I
say,
mean,
yeah, that's legit?
the private lenders know it too, so we use every story that we can, right, to make sure that it makes sense. And I'm not necessarily putting my clients into something where I know they're going to fail.
No.
But some people's exit strategy is, we're just going to sell the house in 2 years, or we're going to sell the house in 2 or 3 years. And that's not necessarily a terrible thing if the person is putting in enough down payment and kind of understands the risks. Well, hey, in 2 years, maybe the market's not going to change. You have to realize that there's a risk that the house isn't going to go up in value. But there's a good chance that the house is going to go up in value, and this is going to be a good strategy for you. So exit strategy can be anything, but generally the exit strategy is, we're going to refinance this back into the AAA lending realm. Or I've moved a lot of people from private lending, which is at that 8 to 12% range, into alternate lending, which is anywhere from 5.5 to 6% kind of thing, or 5.5 to 6.5 plus just a 1% fee.
Yeah. Quite a bit better.
It's quite a bit better. But those alternate lenders are almost as strict as the banks with regards to the documentation requirements and making the story make sense. The alternate lenders do have debt servicing guidelines. We can go generally up to 55% debt servicing with alternate lenders, whereas AAA lenders are up to a maximum of around 44%. Private lenders don't have debt servicing ratio guidelines.
Yeah.
Because it's all about equity for them.
All about equity. Yeah.
Would you say that you see people that are with a private lender, say for a year, are they having more luck getting into alternative lenders than you would see like a first-time home buyer? Showing that they kind of have a track record.
No, I think the alternate lenders are really basing their decision, not necessarily. They do actually, good point. The alternate lenders, are all banks, generally do somewhat base their decisions on previous payment history.
Okay.
So yes, but generally, if the story makes sense, whether it's a first-time home buyer or whether it's somebody getting out of a private, then the alternate lenders will do it. Yeah.
Gotcha. Two other types of kind of mortgage strategies you touched on are cashback mortgages, and then also potentially like buying down a rate to, qualify for more to kind of get into for short term,
right?
6 months. Do you want to touch on both of those?
Yeah, sure.
And kind of same thing, like who could benefit from those?
Yeah. So, I do have a niche product here. It's a cashback product where we can actually give the client up to 4% cash back of the mortgage amount. The client will pay a higher rate. It's not a whole lot higher. It's generally about, I'd say the rate is about 1 to 1.2% higher than our lowest advertised rates. But in that situation, if the client gets 4% cash up front, then they can then use that cash back right away to pay off any unsecured debts that they have. So for example, client needs a $600,000 mortgage, but they also have a $25,000 car loan. on that $25,000 car loan, there's a $700 payment, which isn't unreasonable at all. You know, like most people have these kinds of things. In that situation, if that $700 car payment is preventing that client to qualify for the mortgage, we would say, okay, we're going to calculate things out. We're going to do the cash back mortgage. So on 600,000, 4% cash back is 24 grand. So we can then give that client basically 24 grand. The lender gives that client 24 grand. It's not added to the mortgage amount. It is like you said yesterday, I think, a bag of cash that's given. That's
it's priced in with the increased rate.
Exactly. So the client gets $24,000 up front, uses that fund. So actually, the lender in these situations, the lender will instruct the lawyer to pay out that loan on behalf of the client. It's the way that the lender can ensure that their debt servicing ratio guideline is met.
Right.
So that's a great way for a lot of people to get in who might have still savings and just enough for the down payment, but still that car loan that prevents them from getting in.
Yeah.
And further to Jocelyn's point, it's just getting your toe in the door. And there are so many people and I remember having these conversations with friends trying to get in the market and say, oh, I got to pay off these loans. So it's like a 36-month plan for them to just go eating beans and rice every day just so that they can pay off those loans to get their foot in the market. Well, in 3 years, the market's going to change a lot.
Sure.
So to get this cashback thing, start with a clean slate and get your foot in the door. I think is a wonderful product.
It just gets people, it'll just get more people in. And it is incredibly difficult in our economy, in our life. It's incredibly difficult for people to save. I mean, most people are probably living somewhat paycheck to paycheck or just saving a couple through $200 or $300 a month. Well, if you're saving $200 or $300 a month, how long is it going to take for you to save 25 grand to pay off a line of credit? It'll take forever. Yeah. Right? So this cashback product really is a great product for a lot of people. And thank you guys. More people should know about it.
Well, and I think it's fantastic to get to talk to you about this sort of stuff because, I mean, we have so many conversations with people where it's all doom and gloom and I'll never qualify and just being able to point them in the right direction of someone who can help them and just give them some positivity is great.
Yeah. Thank you. Yeah. And thanks for having me.
And then what about the buying down the rate?
Yeah, so as a mortgage broker, we do have the ability to buy down the rate. So we use our commissions to get the client a lower rate. When the client gets a lower rate, they will then qualify for a higher mortgage amount. Now, we don't usually, we as mortgage brokers are paid for, our services are paid by the lender.
Right.
Clients don't pay us at all.
Well, I guess in this scenario, somebody could pay you directly, your fee.
Yeah.
And then that would get them that lower rate.
Exactly.
To qualify.
Exactly.
So instead of it being priced into, I guess, the percentage, it would be a benefit for some people to maybe if they have more cash, but maybe don't have the income to qualify to get that lower rate to kind of qualify for a bit more.
Yeah, exactly. Yeah. So we'll basically accept a lesser of a commission from the lender in order to buy down the rate. And then in some cases, we would then charge a fee to the client, which is payable at time of closing. So we can't actually technically charge that fee up front, but we could take a deposit on the fee. So we could take a deposit on the fee, and then that deposit will then form part of the fee at closing. But yeah, it's another tool that we have in our toolbox to help a lot of people qualify for a mortgage that's higher than what they normally qualify for.
Yeah, and I think the reason I really like this one is because if you can kind of get in with that super low rate for like a 6-month term, and then the bank's just going to offer you the renewals after that fact.
Yeah.
And then you're kind of in, right?
Yeah, you're in.
If you're struggling to kind of qualify at like a 4 to 5% rate, you're never going to get in at that rate potentially.
Right.
That would be that solution.
Right. So so we do have the cashback niche product, and then we do have the 6-month closed product. And 6-month closed, it is a niche product again. It's offered exclusively through our low rate lender, and the rates are much lower for sure. I'm looking at some rates on our 6-month right now as low as 3.5.
Yeah.
Wow.
So, and I could even go lower than that. But we can go lower. We can go lower than that. But yes, in those situations where we have to go lower than that, we have to charge a fee.
Yeah.
Because we can't work for free.
Yeah. But I think that's worth it, honestly. in a
Oh,
lot of
yeah.
scenarios.
I mean,
yeah.
somebody gets into this market, it's good. I mean, once you're in, kind of thing. And then you just keep building from there.
Yep.
So with the 6-month product, specifically with this lender, the client would have to renew with the lender into one of their fixed 1 to 5 year terms, or into their 5-year variable term. This lender is they're good. They're a good low rate lender. They're not going to rip somebody off at renewal time. They are going to give the client a very good low rate at
like
that renewal
rate.
time. Otherwise the client would pay a 1% penalty to pay that out after the 6 months. So, I want to maintain a good relationship with this lender too. So I just I'm in the background at that point in time, just making sure that the client is getting a good renewal rate from the lender. But generally we're friendly together. So, we try to make things work for clients.
Yeah. Definitely. Awesome. Yeah. 2 very cool kind of mortgage tools for 2 different types of scenarios, 2 different types of people. So it's kind of cool that, there's a large kind of variety of ways to help different scenarios kind of solve the problems with getting a mortgage.
It's not as black
and it
white.
only takes I mean, I think a lot of people kind of get intimidated by maybe calling up a mortgage broker or a bank and just asking the questions. And I
think
hope
a lot of people are like, I don't want to waste your time.
I do get a lot of that. I do get a lot of, well, I'm not sure if I'm going to qualify. I don't want to waste your time. Well, it's never a waste of my time. It's, and generally for me, it takes me 15 to 20 minutes to figure it out. It's not a lot of time out of somebody's day, and it could change their life kind of thing. So
definitely.
Yeah.
One of the things we also chatted about yesterday at the breakfast was kind of like the legislation changes coming that are affecting mortgages. Now, we don't have to touch on every single one because we have talked about it on the podcast at length. And if you have not watch those episodes, you can always reach out to us and we can fill you in, or David, or you can go back and listen. But yeah, David, with these legislation changes kind of coming and helping people either qualify for more or qualify for a bunch of different scenarios. How do you think it's going to affect the market? Like, how do you think the market's going to react to these changes? So there's a confluence of different things happening right now. The interest rates are coming down. The mortgage rules are changing. So, and the spring market is coming, and we've been in this sort of like buyer's market for almost 2 years now, it seems like. So I do feel like there's a lot of pent up demand. So there's a lot of things that are happening at once. And I do think that with all those 3 things kind of coming together and happening at once, we are going to see probably a pretty hot or very warm spring market. Specifically with amortization for first-time home buyers on insured mortgages going,
that's a big one.
Going from 25 to 30 years. You're going to see a whole lot more people able to spend about $30,000, $40,000, $50,000 more than they would have been approved for previously. So that's going to get somebody who's been approved at 375 before is going to now be able to go up to around 425. Somebody at 700, somebody who was approved for 700 before might get approved for 760 sort of thing after the fact. So it's going to drive things up. It'll definitely drive things up in those sort of like, in not just the lower end inventory, but I think it's going to drive things up in all of the categories of inventory. It's going to drive condos up. It's going to drive townhomes up. And it probably will. And by those 2 sort of tranches of inventory being driven up, it's also going to drive up the value of single family dwellings.
Well, I mean, when townhomes and condos become less appealing due to their cost savings, then single family goes up, and it's just a balance. It's
a domino effect. And then the other big change is that the insured maximum purchase price is going from $1 million to $1.5 million. And that's a huge change for some people. So, for example, before, if somebody was purchasing a house for $1.5 million, they would need $300,000 down payment. Now with this new rule, assuming that that person or couple income qualifies for the mortgage, they can put down a minimum of $125,000 on a $1.5 million mortgage. So there's going to be, and there are a lot of couples out there who are making a lot of money and will be able to qualify for that big of a mortgage on the insured basis. And those people will also be able to qualify on 30 years versus 25 years.
Yeah.
So I do think sort of all levels of inventory under that 1.5 mil mark are probably going to get a boost.
Yeah. Question for everybody here. You know how in Victoria, the cream of the crop property is the home with the suite, right under $1 million. How many years over under before that turns into 1.5? Because it's not going to be right away.
Oh, I disagree.
I think it's gonna happen.
If we have one really strong spring market, which is what I think everyone I'm talking to, and not just the professional optimists, but everyone I'm talking to is saying spring of 25 is going to be nuts. I could see us, if people can qualify for an additional 8% of debt, just based on the rates coming down, like you were talking a little bit about how, before you could qualify for 7, now you're up to 760. If everyone instantly gets like an 8% bump in what they can qualify for, forget this first time buyer, like forget the insured mortgages up to 1.5, forget all that. Just this increase in affordability, I could really see within 12 months we'd be up 5% in prices. That would be my prediction. And so for us to get up to 1.5 is probably 2 or 3 years beyond that. It really depends on, and David had a great graph about this at the breakfast, about the direction of interest rates. And so if we continue to see kind of like a 3.5% average over the next couple of years, it's going to continue to be affordable. And we've got that ceiling of that 1.5 insured mortgage. I think it'll be like 3 years before we're at 1.5. That's my guess.
We have to remember what happened in 2020, 2021, 2020, beginning of 2022.
Yeah.
People were making offers $100,000, $200,000, $300,000 above list price.
Bingo.
On houses, especially houses with suites.
Yes.
Because the extra $1,000 or $1,500 or $2,000 per month makes a huge impact on somebody's mortgage payment.
Well, they're not building more of that product. That's the thing, is we're not seeing enough single family homes with suites built in the greater Victoria area anyways. So
well, they can. Like, I feel like, I maybe in Central Saanich, but
well, even Central Saanich, not a lot of development happening
that's
like
true.
that.
But I mean, there needs to be, land reuse,
but also
done. But
duplexes are a better return for a developer than a house with a suite.
Well,
I would think.
Yeah, more people are wanting
true.
a return on their investment. So we are seeing people kind of doing that duplex, quadruplex, and finding a way to creatively live in their home and also make money on it. So they're not so much building a home with the suites anymore, which is really what people are hoping to get into.
Jocelyn, they never were.
That's true.
Like, what, 80% of the suites in Saanich were like just shoved into 6-foot basements?
Yeah.
So none of them were planned.
No.
Like 100 years ago when those houses were built, they were like, no, we only need a 5-foot crawl space. No one's going to be dumb enough to live down here. And now a huge percentage of the population lives in these little basements.
Yeah.
And I think I've been talking to some builders lately, and I am seeing more builders motivated to build these duplexes, like you said, building a duplex, but making sure each side of the duplex does have a suite.
Yeah.
Bingo.
We've seen a bunch of those,
And a
The
lot
new
of garden
single
suites.
family.
I'm seeing a lot of garden suites. Like, I'm driving along and I'm seeing things pop up in people's backyards. If I'm driving, I drive through an alley on Redfern to get my kids to school. I'm taking a shortcut, and I see 2 garden suites just on that one block being built. And at the end of the block, there's a townhouse development being built. So it's happening.
Oh, yeah.
And at the end of that block, there's an Adrian Maclaren for sale sign.
Hey,
It's a fantastic listing, people. Check it out.
There we go.
Condo, Oak Bay.
Yeah.
Awesome. Okay, so I guess that kind of touches on the changes. So in that scenario, we kind of talked about rates kind of trending downwards. So David, what are you kind of recommending to your clients right now in terms of obviously like what to do in terms of variable, fixed? What type of mortgages are you recommending for people to take at the moment?
So, I mean, unfortunately, part of my job is saying to people, well, you're not going to qualify for the variable rate.
Yeah.
Right? Because if we're already if we're already maxing out on what your purchase price is going to be, we're maxing out on the fixed rate.
Yeah.
Because the fixed rate right now, if I can get somebody in at 4.19 fixed rate, that stress test is going to be, the qualifying rate is going to be 6.19. If my best variable rate is 4.95, then that stress test rate is 6.95.
Right.
So a lot of people are going to be pigeonholed into the fixed rate. But generally, if somebody does qualify, I'm still, at this point in time, I still do recommend the variable rate. I do think that we're not at the bottom for fixed rates yet. We're just not. And I am seeing I do read the news every day.
Yeah, I love when you come on the podcast and you bring your newspaper.
I do like to bring the newspaper. But I do read the news every day, and I'm a traditionalist. I like to read it off the paper. But our economy has slowed down.
Mm-hmm.
Our economy has slowed down. So generally what happens with that, and there's a lot of threat now from the South with regards to tariffs. So these tariffs are going to be bad for the economy. It could hurt our economy somewhat badly, which is going to drive our rates down. So I do think that we're probably going to bottom out at around somewhere at around 3% fixed rates.
Yeah.
So
I remember yesterday a quote you kind of mentioned is depending on your risk tolerance, which is always something you have to factor in with, what mortgages you're taking. But you said between 3 and 3.75.
Yeah.
Something around that, like in that range, depending on your risk tolerance, lock in.
Right. So
around that time.
For folks that are very sort of like, I have to look at rates every day, or for folks that are very, very concerned about this, well, they could still take the the variable rate, and then they could set themselves a target rate for lock-in. So it's like, okay, I'm going to take the fixed rate, I'm going to take the variable rate right now, and I'm going to say that my target fixed rate is 3.5. And as soon as I can see that rates are around that 3.5 range, that's when I'm going to lock in. And this is generally a strategy that a lot of financial people take, is that sort of set themselves a target, set myself a target. When am I going to sell this stock?
I guess,
how high does the stock have to go before I'm going to sell it?
Yeah.
Because ultimately that stock might come back down if it's going to, so with rates, it's like, how low does the stock have to go before, or how low does the rate have to go before I think it might start coming back up again? But let's face it, I think these cycles take years. Like the interest rate cycles generally take years. Nothing happens in a straight line. So like we're seeing right now, just in these last 2 weeks since 2-3 weeks since Trump has been elected, we have seen a bump up in fixed rates. It's just a temporary bump up. It's our economy is still showing signs of slowing down, which means that still fixed rates are going to come down and the variable rate is going to come down. So while we have a little bit of a bump up in fixed rates this week or last week, we have to think longer term, 6 months to a year. I think in a year's time, probably will be at around 3% fixed rates. And that's when I think that's the sweet spot to lock in, I think.
Okay. You heard it here first, folks.
Yep. Clickbait.
David, one last question, and this is kind of just a hypothetical question that I've personally been. Actually, I have a client, and they own a property that has 3 units in it, and they live in one of the units.
Yeah.
And they're thinking about buying another property.
Yeah.
Now, they'd be moving from primary residence to a new primary residence. It would be a new primary residence purchase.
Yeah.
They're looking at buying like a house with a suite. But now their current house, it cash flows already with just 2 rentals.
Yeah.
And when they rent out the third one, it'll cash flow
even more.
Yeah.
Yeah.
How does already owning that property, they don't want to sell it, they want to keep it.
Yeah.
How does that affect moving into that second property? Would there still be a negative debt ratio if it's cash flowing over $2,500 a month, for example?
Yeah, good question.
Yeah.
So this is my niche, or like I like to think that this is my niche because I've been at this for so long that I've helped a lot of clients buy investment properties or even second or third investment properties. But this is the first step. So somebody has a house that they want to keep. They don't want to sell that house and buy 2 more houses. They want to keep that house and buy the next house to move into. So generally, if you have that client that has property with 3 suites, we're going to calculate out what the total rent is going to be for that home. So that home is going to be considered a non-subject property in our mortgage calculations, and the new property is going to be considered the subject property, the one that we're putting the mortgage on.
Right.
So also, generally, when people are moving out of these multi-unit houses, they're the ones that are occupying the unit that will get the greatest amount of rent, which really, really helps the numbers. So if there's if they're moving out of their main suite, that main suite is going to, let's say, get $2,500 or $3,000 a month. That gets lumped in as a total amount of rent that house is going to generate for that client to move into the next house. So with regards to the mortgage calculation, I mean, it works out a lot better for some lenders. And then some lenders, like, for example, TD doesn't use the positive amount of cash flow that comes through on the rental worksheet. So we put the property on this spreadsheet that they give us to put the property on, and they say if there's a negative cash flow, they're going to count it as a liability. But if there's a positive cash flow, they don't count it. It just becomes a wash. Which is why actually some of these people qualify better with other lenders than with TD. And TD is one of my preferred lenders. Don't get me wrong; they are great for a lot of things. It's a great way for people to get into their next house. They just have to have the right person strategizing the mortgage on both sides. Now, a lot of people will also have to refinance their existing property in order to come up with the down payment on the next property.
Yep.
And in that kind of situation, I prompt people and say, get the refinance done before you go and contract on your next property.
Mm-hmm.
Yeah.
Now, a lot of people don't want to do this. A lot of people don't want to take the step to refinance and borrow more money, or potentially borrow more money until they've found the next property, because they just don't like the feeling of borrowing more money that they don't need.
Yeah.
Mm-hmm.
But if they already know they're going to do it, and it's going to be within 3 to 6 months, it's going to work out a whole lot better if they get the refinance done beforehand.
Mm-hmm.
And there's a very basic point that I'm trying to make here, is that if the bank is trying to approve the loan for the new mortgage on the new property, but they know that new mortgage is still dependent on another mortgage application for the existing property, it's just the optics don't look as good.
Yeah.
It's like, but the optics look great if the client comes in with a bag of cash already ready to go.
Mm-hmm.
So generally, like, it's a step-by-step process, but ultimately, sure, we get a ton of people that just have to do both transactions at the same time, and it gets to be a little bit trickier doing both transactions at the same time, but we get them done.
Yeah, of course. Yeah. I mean, there's, situations where maybe you're carrying 2 mortgages at once or bridge financing, all this stuff. So yeah.
Now, did I answer your question?
The only thing I'm wondering though is, so if it cash flows, or there's a positive, so if you don't use TD, for example, and you're positive cash flow on this property, is that going to count as income for this next property you buy?
Yeah, it will.
And that house that you already own is not going to count as a negative.
Well, there's still going to be a mortgage against the house.
Yes.
So, the mortgage gets added into the calculation. So basically, the rental worksheet includes all of the potential debts against the house.
Yeah.
And any of the costs like insurance. The lenders put on this rental worksheet a vacancy rate.
Right.
So like a vacancy allotment, a maintenance allotment, the mortgage payment, and then anything left over, a lot of the lenders will use towards total income for the next property.
What is there like a rough percentage you would say over a mortgage dollar amount that would cover, all the other expenses that they kind of tally in there? 10, 20, 30%.
So generally, like, if we're putting the all the information into our mortgage application system, we'll use like an 80% offset of the rental income. So like we put the rental income in, and then we use an 80% offset of that rental income. So basically it's the mortgage and all the debts come off of the rental income, or 80% of the rental income, and that's the calculation that we use.
Gotcha. Awesome. Yeah, I know that does answer my question.
Go buy that second house.
Yeah.
Awesome.
But I think, again, this speaks to that bigger idea of like, okay, you have a huge problem, really. When you think about what we're trying to do as consumers, we're working full-time jobs and we're trying to make, to buy that next rental property. It's a multi-million-dollar project when you think about how much is on the line. So why wouldn't you break it down into smaller pieces? Why wouldn't you say, okay, this quarter, my goal is to get David on board. Let's work on the refinance of the existing property. Let's stabilize the rents. Let's fix up our place so that we know that when if an appraiser has to come through and do a rental market evaluation or market rental evaluation, it's going to show really, really well. So do all these things and you break the whole project down. It's just like when we're helping someone buy their first place, you break the project down into bite-sized pieces. You might say, okay, we've got 10 days for due diligence. First 2 days, let's focus on scheduling our inspections and make sure that our mortgage broker's happy. Worry about the lawyer on Friday, man. Like, focus on the mortgage now.
Baby steps.
Break it down into bite-sized pieces. Yeah, baby steps. So I think that just speaks to real estate in general. These are huge, complicated transactions. If you break it down into its smallest pieces, it's just one more form, one more signature, one more coat of paint, and you just keep doing it one bit at a time.
Yeah, smart.
Yeah, I think people just don't know. I think that's the biggest thing is, you see people doing it through social media and you think, oh, it's super easy. I'm just going to keep my house. I'm going to buy another one. So that's why it's so important to talk to people like David and us and break it down into bite-sized pieces. So
yeah. Otherwise it's all consuming.
Yep. And stressful. Let's be real. It's stressful.
Well, it's stressful regardless, I think. But well, David, but I think that's all my questions. Is there anything else that you kind of wanted to touch on?
No, I think that's great. We touched on we covered a lot.
Yeah, you tired of talking?
Mouth is never.
Have some water.
Thank you.
So at this point, I think we're gonna move on to Jocelyn's segment.
No, I have
Neighborhood
to talk.
Here
highlights.
we
Yes.
go.
There we go.
If you didn't know, David, Jocelyn's famous. She does a neighborhood highlight for every one of our market update podcasts, and she just left Oak Bay. Congratulations,
Last
Jocelyn.
week. I was in Oak Bay for like 12 weeks.
Yeah, no, I do listen. I do listen, and I like these. I like the neighborhood updates. That's good.
We will never be done. I think I'm going to do like 500 of them. But today we are doing Fernwood, which is, I think, one of my favorite neighborhoods in Victoria. I don't
say
know.
that every episode.
I know, but you know what? It's like I forget about the neighborhoods, and then
she hasn't made it to Langford yet, where she's gonna be like, "This is my least favorite."
I will start talking about my. I will start talking about my least favorite neighborhoods. So don't worry. I won't let you know that they're my least favorite, but I just won't say that they're my most favorite. But
perfect.
Fernwood really is just such a cool place, and when I think of Victoria, I really I feel like Fernwood encompasses a lot of what Victoria stands for.
The city of Victoria.
It does.
In my head. I don't know why.
Like when people think of people from Victoria, I feel like they are actually thinking of people from Fernwood.
I
so
agree. Definitely.
Well put.
Yeah.
That's funny.
Yeah, and if you don't know about Fernwood, which I think a lot of people who are from here do, but it's not a very big neighborhood. It goes from Bay Street to Chambers to Pandora to Shelburne, and it's like a really artsy looking district. It's got mostly like old character homes. There are some low-rise apartments, lots of duplexes that I'm seeing pop up, and some townhomes as well. And everything, I feel like everything is built, I don't know, between 1800, 1900. Old, it's really old.
But I think there's a decent amount of gentrification kind of going on.
Tons.
There's a couple of those older homes that have been demolished now that weren't
as savory.
Yeah, what are the ones that they protect? The
heritage
homes, and then there's some decently new builds in that area.
Yeah, well, and some, I mean, you've seen the nice new coffee shops popping up, and there's some nice restaurants, and so the gentrification is happening. It's been kind of happening slowly over time, but it hasn't lost a lot of its kind of like artsy, cool feel. There's a lot of those like art murals that are drawn on the walls, and I don't know. It's just got, when you're coming into Fernwood and leaving Fernwood.
Yeah, definitely.
Yeah, it's very, very unique. Some of the pros, I would say, amenities. You've got pretty much everything you need in Fernwood. You can even get your hair done, which is kind of nice. It's super walkable, which is great. There's not a lot of neighborhoods in Victoria that are really walkable, and Fernwood is definitely one of them. There's a lot of parks. There is 3 schools. You've got your elementary school, your middle school, and your high school, so you don't have to change districts, which is really nice.
Yeah, talking about the pros, the Parsonage coffee shop. Yeah, really great breakfast. Mount Royal Bagels, best bagels in Victoria.
They're amazing.
Yeah. And then,
but I think that's just outside of Fernwood.
Is it?
I think it's in Cook Street. Yeah, it's
We
like,
did this with Red Barn
we
last
did this
time.
with Red Barn.
so,
Yeah. I don't want to like put the
We
wrong.
can't give it. Yeah, but it's close enough.
It's pretty close. Yeah, but it's not
walkable.
quite in there. Yeah, it's right on the border.
Okay, and then for high school they have is it Vic High? Vic High's in
Vic High.
Fernwood?
It's
Yeah.
like smack dab in the middle.
It's right in the middle.
And
Yeah.
it's,
Iconic.
It's recently renovated. I don't know if you guys have checked it out.
Looking pretty
Yeah, it's
spiffy.
looking
Pretty
very
nice.
spiffy. And I've heard that if you sit on the bleachers there, you actually get one of the best views of sunsets in Victoria. I've not
Really?
confirmed this myself,
Okay.
but
Well, one
What
thing
about the
that-
ghost stories under the bleachers? Sorry to cut you off, but there's some crazy ghost stories on the
specifically
field.
under the bleachers.
Around the bleachers and the field at Vic High.
Do
Ooh.
ghost high school students try to like kiss
Super
you or
spooky.
something, or-
I've never experienced it. I'm
No.
not like a ghost guy, but like a lot of people are ghost people, and That's what they
Yeah,
say.
Well, I mean, there's lots of history there, so not
Um,
surprising that there's ghosts.
The one thing I will mention with the Vic High renovation though is beach volleyball courts. It's our first ever in Victoria.
what about the rooftop?
Oh, Vince.
It's not a
I
beach.
guess that counts, but like I don't know. That's like for recreational.
If
drunk
you don't want to be
volleyball.
surrounded by drunk people.
Yeah, but because before, because I played twos beach volleyball, and if you wanted to play beach, well, what we would have done in the last like years has we build beach courts at Willows Beach. Every spring, we push the logs, we dig, we rake, and we flatten out this giant section of Willows Beach. But now there's actually some year-round beach
Volleyball
volleyball courts that are
Ooh.
set up at, and they're for use for the public, at least right now.
Yeah, but what about like cats doing their business in there? I don't know.
You just spray vinegar around the outside of it. It's like how you,
You
do
know,
a
like beaches
sandbox.
really
I just
good-
think there's a lot of cats in Fernwood.
What about beach? Yeah, it's true actually. Yeah,
There's a lot of
Fernwood,
cats
yeah,
in
that's a good
Fernwood.
point. A
And
lot of
is
cats.
that, I don't know if that's a con or a pro. I can put it in both,
Depends
depending
if
on
you're a
who
cat
you
person.
are. Yeah.
But
Lots
also
of
probably a lot of
cats.
dogs too.
Lots of dogs.
Yeah,
Yeah. Yeah. I mean, well, I'll segue into on cons on that one.
Crime.
Into crime. It's one of my cons.
Cat crime.
Cat crime.
A lot of cat burglars in that area.
Wah, wah.
Wah, wah. No, I would say, I mean, the only cons really I would think are like traffic. It's a little bit noisy. It's a little dense, and there is, I don't know, a little bit of the trickle down effect from the downtown core, a little bit of crime. I know mostly like petty theft and that sort of thing. Like you can't leave your bikes on your patio.
Yeah.
Yeah.
Well, I mean, there's a couple services offered in Fernwood.
Mhm.
Like I think the safe use like injection site
Mhm.
is in
Close?
Fernwood or close
Yeah,
to Fernwood.
Close to Fernwood.
And so I think there's some people that travel
Mhm.
from downtown for that. But yeah,
Yeah, it's not as bad as downtown for sure.
nowhere
But
near.
there is, I mean, you're downtown adjacent, so it's to be expected.
Yep.
But I personally think the pros outweigh the cons. Yeah, a couple of my favorites. I love the Stage Winery there.
Yeah, Stage is
Delicious.
nice.
Yeah,
Yeah,
it's
yeah.
really nice. Thistle and Wren, if you are a parent, is fantastic.
I
Kid
was gonna
shop.
say I haven't heard of that place. Is that
Yeah.
new? And then you said it's a kid
It
shop.
started out, it was like mostly consignment, but now I think they've shifted kind of, it's a lot more newer stuff,
Okay.
but they do have some consignment, and it's awesome. If you're looking for kind of like good gifts for kids and that sort of thing, they bring in a lot of really, really cool boutique-y stuff. The Fernwood Inn, obviously, classic.
Yep.
Yeah. The Belfry as well. I love the Belfry. Checking out shows there.
Yeah, beautiful.
Yeah, absolutely beautiful. Actually, there's a lot of things that I like there. Mesa
Have you tried
Familiar.
Fernwood Pizza?
No,
Mm.
not recently, but a while ago, and I've heard it's good.
Yeah, I had it last week, and they have like the craziest pizzas. They had one with like hickory sticks on it, and just it was really, really good. You wouldn't think it would be good, but it's pretty
Yeah.
good.
That sounds awful, but
Highly
I'm gonna
recommend.
take your word for it. Yeah. Yeah. I don't know. I have a lot of good things to say about Fernwood.
Yeah. Well, two on here that Little June and also
Mhm.
Shine Cafe. But,
Yeah.
I mean, like I think basically if you want good food or nice cafes, I think there's like you can't really miss. You walk down
Yeah.
the street in Fernwood and you can walk in anywhere and you're gonna get something
100%.
good.
And
Yeah.
it is relatively well priced for
Yeah.
downtown Victoria as well. Like single family, probably between $1 million and $1.2 million. Duplexes we're seeing like $850 to $950. Condos, yeah.
And there is some of those older homes, like those 1910 to 1920
Mm-hmm.
homes that are priced decently well too. Like maybe they need some work, but
Mhm.
you could probably get in like the potentially like 800s for a single family.
Yeah, there's. I think you're gonna be pushing 9. Yeah.
I think close to 9. I
Yeah,
haven't
yeah.
seen. There was one I showed not that long ago that it was $899, and it needed a lot of work. So yeah, I don't know. I think that's 900 is probably like
Okay.
yeah. And that pretty much sums it up. Do you guys have anything else? David, do you like Fernwood?
I like Fernwood. I think, yeah, exactly like you said. It's like your typical Victoria kind of person lives in Fernwood.
Yeah, very. I have to. I mean, I think we have to say hipster at least once while talking about Fernwood.
Oh yeah.
So a lot of tiny toques.
I think more Westphalias per block than anywhere else in Victoria. I'd say.
So yeah, Blundstones are at an all-time high.
Plaid.
Yep. It's a good place.
Yeah, it's a good place.
Vibes are high there.
Vibes are good. Jocelyn's spent a lot of her time working in real estate in Whistler, so she's quite familiar with the hipster lifestyle.
Yeah, except our toques would cover our ears in Whistler, so
more practical.
They're a little more practical. Yeah,
it's not as cold here.
It's not as cold. Yeah,
the ear warmth.
No, and it's quite adorable. I love that about Victoria. I think when I moved my husband here, that's what he expected the whole place to be, and then I moved him to farm country, and he was like, "What is this place?
Why are there rednecks here?"
So yeah, he's like, "What? Where is the tiny toques? I don't really understand." So sorry about that.
You get it all in Victoria.
You do,
but not the major city. You need to move less to find a large demographic of different people.
If I was in my 20s and moving here, I would for sure want to be in Fernwood. So not anymore. Too old.
Yeah, well, I mean, I think I'm on like the outskirts. I live in Oaklands, which is I think mature Fernwood.
Yeah.
You know.
You're moving like slightly. You're in your 30s now. You got to go to Oakland,
and then in
Oak
5-10 years, well, or depending on how everything goes,
North Saanich,
North Saanich, or Gordon Head.
Oh yeah.
Oh, great options.
There we go. I'll get there.
We'll get there. Yeah.
Right,
Stay tuned.
Awesome. Okay. Thanks, Jocelyn. We have a bit of a market update. I'm not sure what we want to touch on because did we already do November stats?
We've done November.
Yeah.
In the sense that we've reviewed October. Like we don't have the full stats. We're just on the final days here of November, so we don't have the full picture for November.
I did House Hunt Victoria. You know that I don't
know.
Leo.
Man, shout out to Leo. That guy has some fantastic insights.
He's the most knowledgeable person about real estate in Victoria. That's not a real estate agent.
And he's very open. He's like, I am not compensated by the real estate industry, but if there's anyone who should be, like I would pay a subscription to get his.
I would as well.
Insights. Yeah.
But anyway, I pulled some of he posted a end of November kind of update, and I pulled some stats from that. So I'm not sure if we want to touch on anything from this. So.
Yeah, I mean, you take it away, Adrian. One insight I would say is it feels like the fall market has carried on longer than it normally does. Normally, I'm telling folks, hey, if it's not sold by Halloween, forget about it.
Yeah, definitely.
But now, like we are seeing a couple sales coming across the finish line here in November. So that's really been interesting for me to see, just anecdotally. But
No, for sure. I kind of know the same thing. Like I've been telling a lot of my buyers who are maybe not as urgently looking, I'm like, hey, like, keep a strong eye out in like end of November, December, and for like properties that pop up where maybe we can get a better deal. But yeah, you're right. I think the fall market's kind of extended, and I haven't noticed that opportunity quite coming in yet.
Not as strong.
Yeah, but
there's more listings though. I would say.
Yeah, definitely.
Definitely.
Basically, strong sales growth in Victoria. I think there's been a rebound in sales. So 62% sales increase in October, well above the provincial average.
Wait, Adrian, are you allowed to talk about numbers, or does this have to be Vince?
Yeah, Vince. I don't know. It feels a little weird saying percent.
Yeah, right.
But yeah, basically how Victoria's performing in regards to the province, we're actually quite strong.
But that's always how we are, guys.
Yeah.
Is it how,
Victoria, we have such a high percentage of people that have their houses fully paid off. They've been here since 73. And they're, you talk to these people and they're like, they're taking me out of here in a pine box. Like that's a huge section of our city. So we're not subject to the same whims and chaos of the Globe and Mail readership.
Yep.
Yeah.
No, definitely. And one thing with this increase in sales in Victoria specifically, the one thing that is noted is that I think unlike October, single family houses kind of like dominated, and we've noticed that condos and townhomes kind of suffering a bit more than single family. But that was one change that they've noticed in November so far. It's more balanced. Detached condos and other residential types. So condos and townhomes kind of catching up in terms of sales. So maybe some of that inventory growing enough where prices got pushed down a little bit more and people are kind of popping in. So
I'm curious just to put David on the spot because I feel like David, you know your numbers, but also you are really sort of canary in the coal mine. Like as people are coming to you for pre-approvals, and I'm sure you track year over year, like what's your gut telling you about the amount of people that are kind of lining up for, getting all their ducks in a row, so to speak.
Yeah.
Before they're out with us, browsing houses.
There's more this year. Yeah,
Okay.
There's more people that are sort of like starting to get back into it here. Just sort of, picking my brain, starting the pre-approval process.
Got it.
But there's still a lot of people that are kind of waiting, so I think Christmas is still a factor. December is still a factor. So while we do have more than, let's say, last year at the same time, it's not like it hasn't exploded yet.
You sure?
I don't think I would personally want to put that on my plate on the month of Christmas, but
yeah, it would be a lot to take on.
It would be a lot. Yeah.
In terms of inventory in Victoria, active listings are up 9% year over year, including all property types. The one thing that's kind of interesting though is entry level detached market. So single family, limited availability in under $1 million. And so we just kind of talked about that on the podcast. Like that is like the target. But right now there's only 27 detached listings under $1 million in the core. And I think compared to last year, it was double. So we look at this market as like more of a buyer's market, but actually in that kind of entry level portion of the market, there's actually half of the amount of listings. And I think the listings that have grown in the market are maybe, the less desirable parts of the market, maybe luxury, things that are a bit priced a bit higher because, people are just a little bit stretched in terms of buying power with interest rates rising. So, but those more affordable options are still very, very limited in this market.
I do feel like part of it too is sellers, with the optimism in the market coming up, there are more sellers that are willing to hold on to a price, knowing that in 3-4 months time, they will probably get that price. So whereas this time last year, there was a lot more sellers that were willing to negotiate in terms of where they would go in their bottom line. And I'm definitely seeing that myself, that people are holding firm a little bit more and probably will moving into spring in terms of prices. Unless they really got to sell.
No, definitely. And then core versus West Shore. Core is quite a bit more active than the West Shore still. And then the one thing that he talked about, Leo, right?
Yeah, Leo.
Yeah, Leo. And so he's not a real estate agent. This is his actual advice for house hunters.
Is he allowed to give advice for house hunters?
He does, right?
He's not a realtor.
He can have opinions. He just can't get paid for it.
Yeah, exactly.
I think that's the difference. Maybe.
Definitely.
I don't know.
And he can't get sued for giving wrong advice. Or, how we can get...
Oh, that's a good point.
Yeah.
There's no Real Estate Services Act that he has to follow.
No, he's just
like, it's going to the moon. Okay.
Yeah, exactly. Yeah. You make whatever tweet he wants. But basically, we kind of talked about it with limited inventory and the upward momentum in the spring market due to, changes in the market, buying power, interest rates dropping. Basically, he's kind of suggesting that waiting to buy a house may become increasingly difficult. Conditions on the ground suggest a challenging environment for buyers in the near term. And we kind of see that as well. Like, if interest continues to rise in the spring market and inventory is still quite limited, like it's not going to get
interest
easier.
As in enthusiasm, not interest rates.
Yeah.
Yes.
Just to clarify.
And that kind of I guess summarizes the market update, kind of what's going on.
Yeah.
So would it be safe to say, don't wait to buy real estate and wait?
Ooh,
that's always safe to say.
Or what's the other one? Date the rate, marry the house.
Yeah. I mean, we always say, if you can, buy now.
Yeah.
But we're realtors.
But that's the thing. Like hearing us say that, even I cringe a little bit. I'm like, oh god.
It's so cringy, but it's also true.
It's very true.
Yeah, that's the hard part.
Yeah.
I don't know. Yeah, and that's the thing. I feel like I don't push it too often, but when I look for opportunity, I look for opportunities for myself. I look for opportunities for the people I'm working for. And yeah, everything I'm seeing is like the spring market looks like it's pushing up, and then also inventory is still quite low. So like I don't see a scenario. I mean, other than cross your fingers, some crazy global economic thing happening that crushes us all.
Are we crossing our fingers for that?
No, it doesn't happen.
Oh, it doesn't happen.
Sorry,
Okay.
Maybe I didn't make that clear. I just think that probably until about like sometime in February, there's going to be like between now and sometime in February is going to be like the prime time of jumping into something. If you can find the inventory during the winter market. So yeah.
Yeah.
Awesome. Guys, any final Final thoughts, final talking points.
Well, this might be our last episode before the holidays. So Merry Christmas, everyone.
Yep.
Yeah.
Have a great holiday.
Awesome.
Everybody.
All right, signing off. Thank you for listening to the YYJ Real Estate Podcast produced by the City Nest team. We have had some fantastic reviews and we love them. So please leave us a review on Spotify, Apple Music, or wherever you are listening. We also really appreciate you guys sharing the podcast with friends and family. Otherwise, Vince, how can people get in touch?
Send me a postcard. Just kidding. Don't do that. Canada Post will not help you. Email me, vincent@citynest.ca.
This is going to come out like way after the strike. And it's,
this will not age well. Just email me.
Jocelyn.
You can call me at 604-907-2074.
And David.
Yeah. Just go to my website, olympicmortgages.ca, or Google Olympic Mortgage and you'll find us, or call me 250-858-7160.
Awesome. And you can reach out to me, Adrian, at 250-464-4122, or on Instagram at Adrian Real Estate Victoria. Thanks, guys.
Thank you.